I'm a global macro investor, and economics, markets, politics, and geopolitics all matter. And there were three things that are happening in our lifetimes that never happened in my lifetime or our lifetimes, and that I learned before I had to study past periods. And those three things are the creation of a lot of debt and money. The second is the amount of internal conflict that we're having over money and values and what that's like. And the third is the changing world order with countries like China and Russia competing with the United States in a way that didn't exist before. It's a basic thing. Everybody agrees we need more money and we need more spending. But if you spend more than you earn, you have to borrow. And that creates debt. At first, it's credit, so it gives you buying power. But you have to pay it back, and that becomes depressing. And so in order to avoid that, central banks can print money and buy it back. But when they do that, that depreciates the value of money. So what we had was a lot of money and credit go out to a lot of people, a lot of buying power. Everybody, when they got it, they thought, oh, that's great. And somehow they seemed surprised that when they spend it, the prices of everything go up. But the truth is that if you divide the amount of money and credit that's used for spending by the quantity of goods produced, you can calculate, well, the prices will change. And so that's what's going on. And that's what went on in a giant wave, the Federal Reserve and the government together. And that produced a giant amount of inflation, between 7.5% if you use year over year, or if you take the core inflation rate, it's closer to 12 and it's rising. There's some temporary influence, but it's basically because of the amount of spending. You can measure the amount of spending, not because of the bottlenecks. Buying power is what matters, right? So what happens is when inflation goes up faster than your other sources of income, you lose buying power. But somehow that seems more acceptable sometimes to people than if it was just taken out of your pocket. You see, if they, let's say, raise taxes or take it out of somebody's pocket, everybody complains, whoever's had the pocket taken out of. But if it comes through printing of money and everybody gets checks, it's more acceptable. But those who are holding money, like money market funds and bond funds, lose the buying power of that. So think about those bond funds. Those bond funds are like down about 10%, and inflation is up over, let's call it 8%. So they lost 18% of the buying power. We think of it as meaning higher prices, but to some extent, that's a rich man's perspective because they say, oh, now I have to pay more. But the reality is you don't get more stuff from that higher inflation. And so it bids it out of the hands of some people. And that hurts the people who don't get it. And so we're seeing a time now where you're going to lose buying power to inflation. And now you're going to see the Federal Reserve also tighten money and credit and raise interest rates. And when they do that, that creates less buying power. You know, they say, okay, now you can't spend as much money and the prices are going high, but they do that in their crude way of trying to reduce inflation. But you get it from both ends, the higher prices and then the higher interest rates you have to pay and the higher debt service costs and also less availability of money. So it's a squeeze, like the squeeze that happened in the 1970s. These things go in paradigm shifts that quite often take, relatively long time because everybody's mindset is in a certain place and they're doing certain things. For example, investors think that cash is safe and they don't pay much attention to inflation. And then what happens is they get inflation and they realize that if I'm holding cash, I'm losing buying power. So then they shift, they sell out their cash or they sell out their bonds and they put that into other things. And when they do that, that also contributes to inflation. Changes like that also happen in a lot of ways, like cost of living increases in compensation, where in the past, when they don't worry about inflation, then they don't think about, do I have an inflation-linked contract for my work? Or do I have enough inflation assets? It might be, oh, do I need to buy, I'm going to store my money in a house. And so that pendulum swing from one mindset and one positioning to another mindset and another positioning in the early stages tends to be self-reinforcing. Those actions produce more inflation and more inflation psychology until that goes to the opposite extreme. Like in the 1970s, people were surprised about what happened because they weren't used to inflation much. Then you had the inflation, and in the beginning, it swung. And then at the end of it, they said inflation will never end, and everybody's positioned for it never ending. And then, of course, what happens is it's so bad that then the central bank goes the opposite extreme, and then they get surprised. And so the 80s was a period which was the exact opposite of the 70s, where you have falling inflation, high real interest rates, and so on. And so the worst assets to own in the 70s were bonds, and the best assets to own in the 80s were bonds. So you see these pendulum swings that way. The amount of political polarity is the greatest since 1900. Compromise is the lowest it's been. It's measured by how voting across party lines. There are two monoliths, and they're at war with each other. And we have populism, which is you have to get on one side or the other. So when the causes that people are behind are more important to them than the system is in jeopardy. The risk of neither party accepting losing the elections is significant. The move toward power dynamics. The idea of democracy is compromise, reaching across, that the law and the rule is of a higher purpose than anything else. But when you get other things that are more important to people, that they're willing to fight for, then you get greater and greater. And it's self-reinforcing, because moderates are people who want to work across party lines and so on, and compromise are through history, through the French Revolution, Russian Revolution, Chinese Revolution, or these are civil wars. In all of those cases, the moderates, they're hurt or they're disposed of, and you have to pick a side. But you're seeing this now. The ideologies are dominant. So for example, when Elon Musk buys Twitter, the decisions he will make regarding Twitter will probably have a greater effect on our society than the decisions the Supreme Court makes. It's one of the symptoms that it's not normal economics in the usual way. So it's a different game that people should be aware of. I have a principle, which is that if you worry, you don't have to worry. And if you don't worry, you need to worry. Because if you worry about things like, if you read about the consequences of what has happened in history, and you look at the likelihood and you say, okay, we can have this kind of a conflict, or we could have that kind of a conflict, external conflict, and boy, these conflicts are terrible. Maybe that sort of brings us more together, because we have the power together if we don't fight each other in that way, and we can compromise and so on. I was just in Singapore, and what they had is they had savings. Because they have a large savings, the income from that savings covers 20% of their budget. So one generation is giving the other generation a savings, a good education, and civility. And this happens in certain places. What we have left our generation with is debts, a broken down infrastructure, and fighting. I mean, the answer is, if we're all good with each other and we're productive and we earn more than we spend, we won't have a problem. But we got to get there. If I was president of the United States, I would have a bipartisan cabinet to try to bring moderates from both sides. I'd have an economic program that was put together like a Manhattan Project, in which smart people from both sides would make changes. I have my own changes that could happen, in which they would both increase the size of the pie and divide it well. I mean, move much more toward equal opportunity, in which people are productive. I'll describe the cycle. By an order, I mean like a world order or domestic order. The system that's in place, run by the people who have the power, and then they determine what the system is like. So you change orders, usually by wars, because you have a conflict, and then, okay, how do you resolve the conflict? They have a war. So World War II ended in 1945. The United States won World War II dominantly. It became the richest country in the world, having 80% of the world's money. Money was gold then. It had 80% of the world's gold. And a dominant military. It had a monopoly on that, and it accounted for half the world's economy. And so it set the rules. It's the reason why the United Nations is in New York and the IMF and the World Bank in Washington, D.C. It was the American world order because it was dominant power. Now, when you are in a dominant power, also these wars are sort of great equalizers, People come back from the war. It's not like some are rich and some are poor in the same way. There's a restructuring and you don't have the same wealth gaps and resentments and so on. And that usually means that you have a period of peace and prosperity. Peace because nobody wants to fight the dominant power. And then they work together and they produce peace and prosperity, and that happens. And that's really does best in the capitalist system, in which capital is provided to those who have good ideas, because they say, we'll invest in you and you'll be productive and so on. But what capitalism does at the same time is it creates large wealth gaps, and it also creates higher levels of indebtedness. So it creates the large wealth gaps because it distributes that unequally. And then that can be self-perpetuating because those who get power, like if you have more money, you can educate your children better. Gradually, you lose equal opportunity and you produce wealth gap and you produce resentments. And you also then create larger amounts of debt quite often. That means that that's a problem down the road. Now, what happens when you become the world's largest power, this is also always the case. It happened with the Dutch, it happened with the British, that because you're so powerful in production, you go all around the world and you are the largest trading country in the world. You get more exports than other countries and more transactions are in your currency. And so everybody uses your currency, which becomes the world's reserve currency. And because it's the world's currency, different countries save in it, which means that they lend to you in it. And that increases your debt to foreigners because when they hold a bond or they hold cash in that, they're lending it to you to get the dollars back in the future. And so that is also one of the ingredients of making a top. There are the wealth gaps, there's that. And then there's also a change in generations and generation psychology. The greatest generation, in a sense, are those who fought through the war, appreciate basic things, that kind of a thing. And then what happens is when you're on top, you become more expensive and quite often more decadent. I mean, you might spend on things that are not good investments and don't last very long or whatever, for entertainment at the sake of buying. So for example, in the United States, I remember when we had a per capita income, which was 40 times China's, and we started borrowing from China. So these are the ingredients. And then you start to see that they cause problems, the financial problem, the internal conflict problem, and so on. And then the type of fighting that we're talking about. It's so interesting because in the mid 1600s, this is interesting. There was 30 years of war. They call it the 30 Years' War in Europe. And they just kept beating the daylights out of each other. And that is when they invented countries as we know it. Before then, there were no boundaries. And what mattered was power. And if you wanted something that the other guy had, you'd go get it and he'd do the same with you. And there was this constant fighting about things. And then in the 1600s, they were fighting about religion too. There's the religious Reformation and the others, which also had to do with power because the church was powerful. But anyway, so they invented countries as we know it with boundaries, and you determine what goes on in your borders and so on. And of course, for the next 100 years, there were hardly any wars. But when the time comes, there's no universal legal system. There's no universal policeman. So if you don't have a universal legal system, there have been attempts at that with the United Nations or before that, the League of Nations. They attempted that, but power rules. And so you're going to have tests of power.